David is a mining professional with over 19 years of experience across mining capital markets, corporate strategy, business development and technical operations. He joined K92 in 2019 and currently serves as President and Chief Operating Officer. Prior to joining K92, he held roles in precious metals equity research with Macquarie Group, mining investment banking with Cormark Securities, and mining engineering with Barrick Gold.
Great. Thank you very much for the introduction. I'm very excited to be here today to provide a corporate update on K92 Mining during a very transformational time for the company. All dates are in calendar year and currency is in United States dollars unless otherwise noted. Forward-looking cautionary statements to read at your leisure. K92 Mining, truly a unique Tier 1 special situation precious metal opportunity. Effectively, in May 2017, we made a disruptive near-mine infrastructure discovery called Kora North. 2 to 3 times the thickness, 2 to 3 times the grade, better geotech, metallurgy, geologic continuity than the Arakompa deposit that we were mining at that time. We rapidly pivoted, started mining in late 2017 and declared commercial production in early 2018. Because of the phenomenal characteristics of the deposit, we were able to largely self-fund multiple stages of expansion as shown on the chart on the bottom left, with our most transformational expansion currently underway, Stage 3, targeting run rate production of 300,000 ounces gold equivalent, with a further Stage 4 already approved, pushing it to north of 400,000 ounces gold equivalent. Because the discovery was made near mine infrastructure, we were able to rapidly grow the resource from underground. As shown on the chart on the bottom right, we have over 7 million ounces of high-grade vein resource, and we used some of the cash flow that we were generating to run a disciplined porphyry program at Blue Lake with a 14.6 million ounce gold equivalent inferred resource. The team has a very strong track record operating in Papua New Guinea, very proven, and we've been operating for over 10 years now. In terms of our balance sheet, we're in the enviable position of growing our cash balance significantly as we completed a major capital investment. You can thank the strong commodity price environment, the strong project delivery, and the strong operating results, which I'll get into later in the presentation. ESG is a major focus for the company with strong relations with government, community, and our workforce. And I'd point out that we are a major taxpayer in Papua New Guinea. The stock has been re-rating with our operational and project execution and has a significant room to re-rate. Looking at pure average multiples, it implies roughly a 30% re-rating. However, as I go through the presentation, I think you'll appreciate from an asset quality perspective that it ultimately deserves a premium multiple to pure averages. And as shown on the chart on the right, some of the best medium-term growth profile in the sector. This is a very high-grade, high-quality, low-cost mine, as you can see from the table. The point I'd like to make is that as we ramp up production, we will be realizing economies of scale, so we'll be in the unique position of, over the next few years, driving our production up and also our costs down. We're located in Papua New Guinea, and I would say that we are located in one of the best places to operate in Papua New Guinea. We're in the Markham Valley, Eastern Highlands, the edge of the Eastern Highlands region. That gives us plenty of room to build, low rainfall, and as you can see on the diagram on the right, excellent infrastructure. Sealed highway from just off from site to the port of Lae, which is the largest export port in the country, Gusap airstrip, and the Yonki hydroelectric facility, which supports the grid power system near us. In terms of our corporate structure, these financials are as at the end of March. We're actually putting out our financials to the market next week. Strong balance sheet, $287 million reported in March. That's obviously grown. Low levels of debt, $45 million, and a further $60 million that we can access from our revolver. Market capitalization in Australian dollars is roughly $5.5 billion. In terms of research coverage, very well covered in Canada. We're listed on the Toronto Stock Exchange, 13 investment banks covering us. Very well institutionally held, and I'd make the point that about 18% of our share register is held by Australian institutions, with our largest shareholder being L1 out of Melbourne. The story of K92 has really been about value creation through discovery. So just going through some images here. The image on the left is from May 2017, where we made the discovery of Kora North. Fast forward 4 years, we combined Kora, Uatompe, and Kora North into one deposit called Kora. and the Judd vein system, which is subparallel to it, started to emerge. So roughly 5 million ounces of high-grade resource. In 2021, we were honored to be recognized by the PDAC in Canada for the Thayer Lindsley Award, which is for Best Global Discovery. And then fast forward to our latest resource, which is September 2023, just over 7 million ounces of high-grade resource. We'll be looking at putting out an updated resource to the market in early 2027. We've been really crystallizing the value from the drill bit through a strong operational execution and multiple expansions. So in 2020, we delivered the Stage 2 expansion, which doubled plant throughput. In 2023, we delivered the Stage 2A expansion, increasing plant throughput by 25%. And very recently, we delivered the new state-of-the-art 1.2 million ton per annum standalone Stage 3 process plant, targeting run rate production of 300,000 ounces gold equivalent. When we built the plant, we built it to be expandable. So what we did was we oversized the comminution circuit, and we made design allowances to cost-effectively upgrade the wet end of the plant, particularly the flotation cells and the filter presses, enabling us to, at low capex, increase plant throughput to 1.8 million tons per annum, implying production north of 400,000 ounces gold equivalent per year. As at mid-year, 98% of growth capital has been spent or committed, and the project remains on budget. Looking at our operational performance quarter over quarter, we've continually ramped up metal production with our physicals. In terms of our calendar year, guidance is for 190 to 225,000 ounces gold equivalent. The second half of the year is expected to be the strongest, driven by key enabler projects coming online, driving throughput up, and also the benefit of stoping sequence, particularly in the fourth quarter, giving us some improvements in grade. Looking at the mine physicals, in Q2 we took a major step forward. So we delivered record tons through the plant, record development meters, which are now tracking 11% higher than what's required for the Stage 3 expansion, which is 3 kilometers a quarter. And looking at the monthly records and also what we achieved in July, we're firmly on track in terms of the 1.2 kilometer a month required for the Stage 4 expansion. Total mine material, that was also a quarterly record. I'll point out that we expect that to really take off in the fourth quarter as our new 60-ton trucks combined with our haul road upgrade comes online, which I'll show later on in the presentation. In terms of the plant, we delivered 9 consecutive quarters of gold recoveries performing better than the updated definitive feasibility study, and copper recoveries have been roughly in line. The last 2 quarters, it's been exclusively the new process plant. We've been very pleased with the performance. We built a very strong foundation, and we've also identified multiple areas of improvement to build upon that. In terms of the expansion, there's been a major capital investment into the underground. When K92 presented last year at Diggers, there was 2 check marks. There was a check mark for the twin incline, and there was a check mark for the ore pass. We just tipped tons down the first ore pass in August of last year. We got 2 material passes operating now. We got 1 dedicated for ore, 1 dedicated for waste, and we have a 3rd material pass that we're currently developing. Puma vent drive, that broke through. That's our life of mine vent upgrade. That broke through at the end of February. And the internal ramp connecting all of the mining fronts to the twin incline, that was completed in late January. I'll just show some visuals so you can appreciate the impact of the infrastructure that we're putting in. So the image on the top left, that's the incline that we acquired from Barrick. And from commercial production up until very recently, that's where most of the ore tons came out of the mine. You look to the right of that, and that's the new incline that we put in. It was a multi-year effort. We started it in 2020. It's significantly wider. We can run trucks that are 50% larger than the old incline, and we can go 2 to 3 times the speed. So it effectively is an underground highway. The next image to the right of that is the breakthrough of the internal ramp. This is a big deal for our crews. You can see on the banner there, we are now one mine. And what that means is that all of the mining fronts are connected to the twin incline, but it also means that we no longer have to run 2 captive fleets, 2 captive crews, 2 captive management teams, 1 for the lower mine, 1 for the upper mine, is all combined now. So a lot of synergies there. As you would have noticed on the prior slide, a large majority of the resource is actually above the twin incline. So that gives us a gravity advantage. So what we've done is we've put in a couple material passes. How it works is that a truck gets loaded in the upper mine. It does a short haul and then direct tips down the material pass. That particular pass, the material reports down 300 meters vertically, and then it gets loaded at the bottom where the twin incline is, goes into a truck, and then goes out the underground highway, the twin incline. Ventilation has been a constraint for the mine for a number of years, and I'm pleased to report that it is no longer. We broke the back of that when we broke through the Puma vent drive in late February. That naturally drove a 75% increase in airflow to 350 cubes per second. That initially meets what we need for stage 3. And we're also weeks away from electrifying our new primary fan chamber. You can see it's absolutely enormous, 9.5 meters high, 15 meters wide, goes 35 meters into the page at that profile, and it also tapers out another 35 meters. Those motors on the fan are actually larger than our mills. That enables us to push airflow to up to 700 cubes per second. That meets our stage 3, our stage 4, and beyond requirements. An important aspect of this is that it also lets us reconfigure our vent circuit, so we're able to run both twin inclines as fresh air intake, enabling a highly productive one-way traffic flow. Concurrent with those underground infrastructure upgrades, we spent years opening up the mine. So over the course of this year, we are going to increase the number of mining fronts by a factor of 3. Front number 1, that's the main mine. That's where we've been operating since commercial production. Front number 2, we call that the lower Kora. We started our first stope in April and are ramping that up. And front number 3, that's the twin incline front. We got 5 sub-levels being developed there, and we'll start our first stope in Judd later this quarter. And front number 4, that comes online upon the delivery of Pastefill. Just looking at some of the surface infrastructure that we put in, this is the brand new process plant, and as I said earlier, it's running extremely well and been fully operational since late last year. In terms of some of the ancillary projects, the warehouse expansion, that is complete. I'd just like to point out the lighter part of the roof in the distance. That is what we acquired when we bought the asset from Barrick. So it just gives you an understanding of how much we've increased it. Cooming Creek Camp, we built a new camp next to the existing camp, and we continue to expand that, meeting the demands of our ever-increasing workforce. Power plant, this has been a real win for us, and I think is an example of how we've been able to keep the project delivery on budget. We built this for under half what the EPC contractor quotes were, so we're really, really pleased with the delivery there, and our new maintenance workshop, that's weeks away from being completed. The major remaining project to deliver in terms of stage 3 construction is the Pastefill. We took a lower technical risk approach, so what we did is we have a tailings filtration plant in the valley next to the process plant. That produces a tailings filter cake, and then that gets backhauled 6.5 kilometers up the hill near the portal area. And then on demand, we then truck the filter cake to the underground Pastefill plant. That underground Pastefill plant is located near the center of gravity of the known resource. So what that means is a large portion of the resource, we can send the paste conventionally via gravity, and then what's above it is through manageable amounts of pumping. Just to show you some pictures of how it's tracking, the tailings filter plant construction that is done, and we're nearly complete commissioning. And from a moisture content perspective, what we've got is better than what's required for the backhauling requirements. In terms of the surface storage facility, that's nearly complete, and we're looking at starting commissioning this quarter. And the underground Pastefill plant, very active construction on all levels, and we're looking at getting that commissioning in the 4th quarter. One of the major upgrades that we're doing is also to our haul road. So from the mine to the mill is 6.5 kilometers. It involves 3 river crossings. If you look at the Kasisi River crossing image, you'll see the bridge that we acquired from Barrick. That has a payload restriction of 20 tons. And by doing these river crossings, we're able to run 60-ton Volvos, which will be starting operation soon upon the completion of these by the end of the 3rd quarter. The Balpa Bridge, that's already complete, and the Kokomo Bridge, that was completed just a few days ago. Mobile fleet has massively expanded. You can look at the change column, a big focus on obviously the trucks and the loaders, and a renewal of multiple pieces of equipment. The other thing I'd like to point out is we're getting another jumbo at the end of the year. That will expand our jumbo fleet. So even though we are hitting the lateral advance required for the stage 4 expansion, we want to get above that because we want to build in more operational flexibility going forward. Government relations have been very strong. These images are from some of the site visits. There's been more, actually quite a few more site visits than pictures shown here, and I say that the PNG government has been a major factor in our success to date. Looking at the Gantt chart, when we presented at Diggers last year, there was 2 check marks. Now there's a lot more, and you can see from the images that I presented earlier that there's quite a few more that are going to be popping up over the coming weeks. Exploration has been a major focus for the company and a major value of, and a major driver of the value that we've created. We increased our budget by over 50% year over year, so $31 to $35 million this year. In terms of underground exploration, we have 7 drill rigs operating, targeting number 1 to 3 on the list. That's the Kora, Kora South, Judd South vein systems, and we're actually bringing in a surface drill rig to target Judd North, which I'll talk about in a couple of slides. 5 drill rigs are operating on a regional exploration at Arakompa, and we have 1 contractor drill rig operating at Wira. 2 drill rigs arrived on site last quarter, which are in the process of being commissioned. So we're capable of increasing our drill fleet up to 16, of which 15 drill rigs we own. Looking at a long section of Kora South, there's a few key points to make here. So number 1 is for the last few years, we've spent a considerable focus on infill drilling to better define those mining fronts that we're opening up for the Stage 3 expansion. As you can tell, we've done a lot of infill drilling, and we're now in a position where we're ramping up the step-out drilling. Earlier this year, we put out our first set of results out at Kora Deeps. And what you'll see is that the mineralization, both in terms of thickness and high grade, continues significantly at depth, hundreds of meters below the twin incline and hundreds of meters below the latest resource. The other point I'd like to make is that now that we're getting our lateral advance up, we're able to start pushing more discretionary meters for exploration development. So we'll be planning on pushing the 1200 drill drive to the south, and also the twin incline to the south, as there are some really strong vectors at both Kora South and Kora South Deeps, with some very high-grade copper intersections also demonstrated. From the infill drilling, we had in many areas an improvement of what we had in the resource. I'd like to first talk about the dilatant zones. So we found a couple dilatant zones just off of the twin incline. Those are marked by the double-ended blue arrows, with some really high-grade results, including 21 meters at 14 grams and 16 meters at 16 grams. They're very close to our existing development, roughly 50 meters away, and we'll look at getting into those areas upon the delivery of Pastefill in 2027. And I'd also like to point out that as we continue to increase drill density going up dip above the main mine, we continue to extend high-grade areas, as shown in the upper black ellipse. Looking at Judd, it's very much a similar story, but a few years later, we started drilling at Judd in late 2020. You can tell really strong results at depth, hundreds of meters below the twin incline and the latest resource, and some really good vectors at Judd South and Judd South Deeps, and also Judd North, where we're looking at getting a surface drill rig in there shortly. And again, similar to Kora, as we increase the drill density up dip, we are extending high-grade zones. I think you'll see from both of the slides that there's significant quadrants that have yet to be drilled, and we believe we are just scratching the surface. In terms of regional exploration, our main focus has been on Arakompa. It's located 4.5 kilometers away from the process plant. It's actually closer to the process plant than Kora and Judd. Arakompa is hosted in different host rock than Kora and Judd. It's hosted in diorite and tunnelite rock that is more permeable, so you get these bulk zones as shown on the long section. These bulk zones are also punctuated by multiple high-grade veins. There's 2 veins in particular shown on the slide, AR1 and AR2, that have significant continuity over significant vertical and strike. What I'd point out is that as you go to the north, which is to the right of the long section, we're actually getting into the same host rock as Kora and Judd, so we'll see how that goes. The point I'd also like to make about Arakompa is that it is growing at a very rapid pace. The image on the left is from our first set of drilling results in February 2024. We had 1 drill rig operating. Fast forward to our latest results in June 2026, we got 5 drill rigs operating. We got a large bulk component. We got multiple high-grade veins, and we actually have a porphyry feeder zone emerging to the south. So I continue to recommend watching that space. And lastly, huge pipeline of exploration targets. Talking to our VPX, who is at Diggers, he sees over 25 years of known high-grade targets. known high potential targets. Those prior slides that I showed, it's only a snippet of the 830 square kilometer land package that we are exploring. Thank you.
Thank you, David.